One of my all-time favorite authors is Nassim Nicholas Taleb, who's written a number of bestsellers, one of them called Skin in the Game. And one of the best lines from it is, "Don't tell me what you think, just show me your portfolio." And this applies in many different areas. I don't want to know what a doctor thinks about a diagnosis. I want to know what he or she would do in my shoes. In that line of thinking, I'm here today to talk about where my portfolio is at the end of the first quarter of 2022. My name is Brian Stoffel. Now, I'm not going to lie to you, if we look at how my portfolio in real life has done over recent past, it's not pretty. Year to date, at the end of the first quarter, which was March 31st, my portfolio was down 18%, while the overall market was down 5%. That hurts. And even if we back up for a full year, my portfolio was down 3%, while the market was up 15%. What does that actually mean? Well, it means that a $10,000 investment that I made is down to $8,200. And if it was a year, it's down to $9,700, while the market is actually up. However, we focus on long-term investing, and so it is very important to look over a much longer time frame to get a sense if what we're doing is working. And in that respect, I believe that it is. Over the past 3 years, my portfolio has more than doubled and it's beaten the market. And over the past 5 years, it's more than quadrupled while the market is up 91%. Based on a $10,000 investment, here's what those results look like. As you can see, over 5 years, I'm left with more than twice as much as if I had invested in the stock market. But what if we back it up to a full 10 years? Well, based on the data that I have available, it is more than doubling the market's return. $10,000 growing at that rate over 10 years would be worth over $56,000 today versus the market's $32,000. So what did I do during the first quarter? Well, I made a couple of major moves. When it comes to stocks that I bought, there were a couple of big ones. Airbnb, Cloudflare, Snowflake, HubSpot, and PubMatic were all major buys, and we made videos on these as well. But I also made some sells. One was the Grayscale Ethereum Trust, which was like owning a little bit of a cryptocurrency, which I got rid of. Riskified and DocuSign are two stocks that are actually still in my portfolio at the end of the quarter. I'm just waiting for permission to get to sell them. They will be leaving my portfolio very soon. So where exactly is my money right now? Well, let's go through the top 10 holdings that I had as of March 31st, 2022. Coming in at number 10 was Alphabet, better known as Google. It's about 5% of my portfolio, and I've owned it for over a decade. It has absolutely crushed the market, returning over 700%. That's plus 500 over the market. Now, everybody is probably familiar with Google, but Alphabet also has a bunch of other areas like Nest and Calico and Verily. These other bets haven't really worked out yet, but if you buy shares of the company, you get that optionality almost for free. As you can see, the company also scored very well on both Brian Feroldi's qualities checklist and my anti-fragile framework. Coming in at number 9 is Atlassian, ticker symbol TEAM or TEAM. It's returned about 150%. I've owned it for the last 3 or 4 years. And for those who are unfamiliar, Atlassian builds tools that helps teams collaborate. Jira is very popular with coding professionals, but it has other things like Confluence and Trello that help teams collaborate on work projects that aren't necessarily technically inclined. I only know that because I'm not technically inclined and I use Trello. And as you can see, Atlassian has the dynamics that we love to look for in software as a service companies, where the amount of money that each cohort pays to Atlassian every year is growing. That's how it got a score of 88 on Brian's checklist and a score of 13 on mine, both very high scores. Coming in at number 8 is Axon Enterprises. This is 5% of my portfolio. It has increased 5 times over in value in my portfolio, and it has crushed the market. For those that might be unfamiliar, this started out as Taser International, but it has gone through a change as it focuses on Axon body cameras primarily for police departments. But it's the software solutions that Axon is building that really got me interested. Evidence.com, Axon Records, and Dispatch are all very interesting ways to use this technology to help outcomes for everyone involved, police and citizens, and it scores above the top threshold for both Brian Feroldi and myself. Now, coming in at number 7 is Airbnb, a stock which has moved up because I've purchased more of it. In fact, it is 6% of my portfolio now, and this is a short-term holding. It hasn't gotten much in terms of returns at all, but it also hasn't had time to do that. Why did it score so well? Well, I think that this is, first of all, a mission-driven company. I also think that it's impressive how they have used optionality. Their mission is to help people belong anywhere, and that has gotten them to expand beyond just short-term stays into long-term stays, but also experiences in person and digital experiences. The company was free cash flow negative, losing huge amounts of money as the pandemic started, but it has already recovered and has turned out over $2 billion in free cash flow, even though we still haven't gotten a full recovery in travel. That makes me a very optimistic shareholder. Coming in at number 6 is one of my oldest holdings, and that is Amazon.com. It is 6% of my portfolio. It has increased 17 times in value, which, no surprise, it's absolutely crushing the market. The interesting thing to note about Amazon is everyone knows it as the everything store, but it's all the tools that are built for the everything store that really make this a moneymaker. AWS, or Amazon Web Services, is the primary example, but fulfillment and advertising are all examples of things that were built for the everything store that are letting other people use it, and that's where all the money is made. It gets a sky-high score on my anti-fragile framework as well. Number 5 is Datadog, which is another software as a service company that focuses on analyzing and observing a company's digital operations. It is 6% of my portfolio. I've owned it for about 3 years. It has quadrupled in value and is also thrashing the market. One thing that I love about Datadog is its optionality. It started off with just 1 or 2 tools that customers could use, but within the last 5 years, the number of those tools has increased markedly, and importantly, customers are adopting those tools quickly. Number 4 on my list is MongoDB, which admittedly has a technology I'm not super familiar with, which is no SQL databases. In layman's terms, this is a database as a service project. In other words, it helps companies organize all of their data. As you can see, in the short time that I've owned it, it has been a huge winner, increasing in value 6 times over, and now accounts for 8% of my portfolio. Now, you might also notice that it gets an anti-fragile score of a 10, which is kind of low, but part of that is because it is not a founder-led company with a lot of insider ownership. Coming in at number 3 is cybersecurity software as a service company CrowdStrike. I've only owned it for 2 or 3 years, but it has quadrupled in value and now accounts for 8% of my portfolio. Now, much like Datadog, one of the things that I love about this company is that when it came public, it had about 11 tools for customers to use, but the number of those tools has increased dramatically in just a few years' time. And just like Datadog, customers are actually adopting those tools, which is a strong sign of optionality. Number 2 on my list is Mercado Libre, which is a leading e-commerce and payment company for South America and Central America. Mercado Libre has been in my portfolio for a long time, but I've added as time has gone on. And in general, it has increased 8 times over in value and accounts for 8% of my portfolio. Like many of the other players, Mercado Libre also has a lot of optionality. Mercado Libre's core marketplace is still the engine driver, but Mercado Pago, the payment solution, has become much more important over time, and they're not done expanding. Mercado Envios is a fulfillment system, and Mercado Credito is offering credit to users of Mercado Pago. It also scores very high on the anti-fragile framework. And coming in at number 1 in my portfolio is Shopify. This is despite the fact that the stock is down markedly since November of 2021, and yet it is still 10% of my portfolio. For those who might not be familiar, Shopify makes it possible to set up an e-commerce store for anyone and grow along with those customers over time. It gets an anti-fragile score of 14, and it also scores very well in Brian Feroldi's quality checklist. Of course, that's not all that's in my portfolio. While I run a relatively concentrated portfolio, there are other stocks that were worth mentioning as well. Those accounting for about 4% of my portfolio include Viva Systems and also Unity Software. I have a number of positions which are about 3% of my portfolio. That includes Cloudflare, C Limited, Snowflake, and Intuitive Surgical. I also have around 2% positions in Pubmatic, as well as Tesla. I have a 1%-ish position in Zoom and UiPath. So that's where my portfolio is. It has not performed well recently, but I'm not letting that bother me. And now you know where all of my large positions are. Do you like learning this? Let us know in the comments section below. Brian, out.